Hey, hi, guys.
Good deal. Good deal. Let's see. Cool beans. All right. So we can jump right into it if you're ready, John. Somebody will share a screen. I'm on the phone. But what I wanted to cover, I guess, on this little bit of recording was to hammer home the idea about closing the gap, which if anybody has that tool in their arsenal of things to do with the market, I think it would be essentially very, very useful because it bleeds over into everything else. If you are approaching the market from an order flow mindset, which hopefully everybody is. So Masood or John, if you guys can give me a blank chart with nothing on it besides just, I don't care about the data, whatever data series you guys want to look at, because it won't matter. Naturally, if you're closing the gap, I would say something super fast, like 30 seconds or 1 minute, but it can be done on a smaller time, on a bigger time frame.
Bring up a chart. Do you prefer white background or black background on a chart?
Okay, well, I use black, but whatever you think that
Okay.
folks that look at, whatever they see better, whatever you think that folks will see better is good with me.
I'm bringing that up here.
Thank you, sir.
You're welcome. What time frame do you want?
Let's put it on 30 seconds. I mean, that's quite responsive, and then I'll cover some points that, again, it's the 30-second is not necessary, but naturally for a price action setup, you want to be fast because you don't want to be 3 minutes after the 30-second people have entered because they're getting ready to get on out of there. So I like using the 30-second at the market open because it's a gap closure setup, not because it's so much the 30-second. I trade the 30-second, but I grew into 30 seconds. When I first started trading, I was trading a 5-minute chart. I moved to a 3 and then a 2. And the 1 seemed too choppy for me. It seemed like the 30 would get me where I needed to be faster versus waiting on the 1 and the pain of some of the ones that don't work. So, but a 30-second chart should be good.
Do you want a chart with the day session only so that it shows the gap?
Yeah, I was gonna walk them through how to build it, but that's fine. Yeah, at least as long as it has the market open or the market closed from the previous day. There's a tool from NinjaTrader, the open, high, low, close. It shows you what the closing price is from the previous day. And if we have at least that as a starting point and at least the previous day's high and the previous day's low, I think those are some good landmarks to
Is that an indicator from Ninja?
Yeah, if you go into your indicators, it would be under the word prior, Prior, and it's prior day OHLC. And I normally, I don't use their open because I use an opening tick situation from NinjaTrader, but I'm sure it'll show you the open price from yesterday as well, which I think was at the close, if I'm not mistaken.
All right, I'm bringing that up here.
Yes, sir. On your computer, Mr. John, I'm gonna put put that picture for the gap closure in the general section just so everybody can have it, because we'll start talking about those data points. I think that data point comes from over 10,000 scenarios where gaps played out between 2014 and 2016, if I'm not mistaken. And that sheet actually comes from when I was only trading the stock market before I became familiar with the futures. But it, as I shared with you guys the other day, whether it's the stock market, futures, equity, options, it's still humans. So human behavior is predictable. The psychology behind why people make the decisions that they do. It's a pattern that can be repeated over time.
Okay, I'm looking for the sharing the screen, and it says one participant can share at a time or multiple participants can share. Is that just the single option, I guess, no? Only one?
Yeah, Yeah, so I think when you hit share, it'll allow you to choose which of the screens that you want to share.
Okay,
And then the bottom left, I would click the computer sound button if you want to have any sound that you want to put in the video.
okay, it's good now.
That looks good. All right, so if you will, let's point out the landmarks that people can see right now. So the closing price, can you go back into the indicator so on the video they'll know what landmarks we're looking at?
Back to where?
Into the indicator itself. So we're gonna color code so when we see it with our eyes, we know which of the items we're looking at.
The indicator settings you're saying? Okay, here they are.
Yes, sir. All right, so we're prior day OHLC. If you will highlight the one at the bottom left. There you go. There you go. So now when we see on the chart, these are the landmarks we want to know which ones are which. So for the prior day close, can we turn that to a yellow?
Just a second, let me take a picture of this.
Being purple.
Let me take a before and after picture, okay?
All the way at the bottom.
Yes, I know, just a second
Yes,
here. So I will follow.
Okay.
All right, which one? The close, the bottom one?
So you can save it as the default template.
Oh,
Yeah, so change that one
okay.
to yellow.
The bottom ones,
That's
change
gonna
it
be
to
our
yellow.
highlight spot.
Here. It's not giving.
Yeah,
Oh,
so
here it
scroll
is.
it down
Okay,
a
now
little
it
bit more, and then it'll allow you to change the color.
Yellow.
And then let's change the prior day low.
Friday low, okay.
You can make that a blue. Is it already blue? I don't know.
It's red.
It's red.
Red.
So make that a blue. And make it a blue. The prior day high, you can make it a magenta or purple or whatever is in that line of colors.
Cool. Yep. Okay. The prior high, you want magenta?
Yeah, magenta or purple.
How about the
And
prior
then
open?
you can make it white. And then if you just call it gap. That way it doesn't mess with the factory setting.
You said save the as gap.
Yeah, when you save it, it'll give you the option to type in the word gap.
Yeah. Okay.
There you go. And then now anytime you go and open the prior day OHLC, you will always be able to get to the gap. In the Discord, can you bring up the image or from the WhatsApp, the image that we have for the gap? So we'll start there so we understand the numbers, and then we'll bring what our knowledge base tells us to the chart.
You want to go to the Discord app? You say the Discord? You're breaking up.
Oh, I was saying, do you have WhatsApp on the computer?
Oh, yeah, I do.
I was gonna say, just bring closures.
You're breaking up. I don't understand the instruction. You said the WhatsApp.
Okay, John, is that a little better? I was using Bluetooth headphones. It might need to be charged up. Is that a little better?
Yes, certainly.
Okay, good deal. So the image that I sent you guys that has the data points for gap, bring that image up so that they'll be able to see it in the video.
Okay. The 100% gap closure, is that the image?
Yeah. Or the white one. It has white and it has a bunch of data points about which days of the week the gap does what.
The white one. I see the graphs chart, the graphics illustration. Yes. Okay. Just a second, I'll bring that up here.
Okay, thank you.
You see my screen?
I only see the chart currently.
Okay. Just a second.
Sure.
That it?
Yep. Okay. All right. So listen, there are some key points that I want to point out here before we go back to the chart, because once we understand these key points, then it will make sense why we're looking for these things on the chart. As I share with you guys, these are over 10,000 data points analyzing the stock market over different vehicle classes and different stocks. But again, it's humans trading all of them. And for whatever reason, just like with Fibonacci numbers, nature wants to do a thing. If we open our window and we get bit by mosquitoes and we wake up and we don't like mosquito bites, we're going to, when we wake up, realize that the window was open. And what are we naturally going to want to do? We're going to want to close the window, because we don't want, it's not normal for us to wake up with mosquito bites. The market doesn't like not normal. It goes all the way up, it comes all the way back down, but it doesn't like not normal. And so when not normal presents itself, the market will, by nature, have an inclination to get back to what would be defined as normal. The data points that you all see there says that which particular business day of the week do gaps fill. If you look at Monday through Friday, there's a common denominator to all of them. The lowest number is 65. The highest is 82. All 5 of those numbers are greater than 50%. At the bottom of that sheet, it also shows you when gaps fill, the particular size of the gap, and how much of a gap will fill in that scenario. If you look at the size of the gap, and we're trading, and I'm being specific about the NASDAQ market, all right, I'm looking at anything that's greater than 20 points. When I look at 20 points, the reason I'm saying 20 points is because if I get half of that, I can make 10 points out of the deal. 10 points out of the deal for NASDAQ is $200. And if you look at all of the data points that are on there between 1 and 24 points, every last one of them has a percentage that is associated with the gap closing. Statistically, they say that gaps close 100% of the time within the first 10 days of the gap forming. So that means that by definition, the gap is the close of the previous business day and a price point that opens on the next day that is a deviation away from that point, and it has to be significant. So if we close the market yesterday, and in our case, we have a closing price, and people wake up and they see that the market is very far away from that, nature wants us to not like it and bring it back to normal. So it's in understanding that gives you an edge and an opportunity in the market to take advantage of price that goes towards where the closing price. That's called fading the gap. You can fade the gap in both directions. So that means if the price closes lower than where current price is, you would fade it back down to the closing price. In that case, we would be short. If the price closed yesterday and today we are dramatically lower than yesterday's close, we would fade the gap back up towards the closing price, in which case we would be long. By definition, fading the gap is a reversal play because there is a predominant move away from a number and then fading it back to it. So I'll use another basketball. People shoot the ball and it's a fadeaway. They are jumping away from the basket, but they are shooting the ball back at the goal. You see the point there? Goal. Okay. So now if we're trying to get to a goal, and we know that by nature, that market participants will want to correct a deviation or a not normal thing, we just have to be prepared to take a trade when the moment arises that matches the thesis of that idea. So numerically, it says that we can pretty much book 50% gap closures. Now, will a 50% gap closure happen every single day? There may be days that it won't. But if it doesn't 50% gap close today, the next day or within the 10 days from the time that that gap happened, if you measure a spot that is away from that close, you will see that 90% of the time that 50% will happen. All right, so if you will bring your chart back up, this is when it gets a slight bit, I won't call it sticky, but it's as fluid as the market. It is no definite in any of it because we don't know when a top sets itself and we don't know where a bottom will set itself. Today, when I sent you guys my prep journal, I identified 444 as a market high. The market went to 15. It was about 10 points away from that high. General area. It doesn't have to be specifically that number, but a general area, right? So if we get close to an area, then we can expect, if that's an area that we've identified as resistance and we want to fade a gap with a short, that's where we would do it, and then vice versa. So today, we have what was presented to us. If you woke up at 3 o'clock this morning, we were deviating from the closing price in an upward manner. So let's go to 3 o'clock or midnight-ish, somewhere in that area. We will look at that area and then we'll come back to 9:30 and do it again. That gives us two representations within one business day of how a gap could be faced. All right, so it looks like
Let me go back here faster if I can grab
okay.
this chart in a different way.
Okay.
Okay, midnight you said, huh?
Yeah, that'd be good.
Actually, I got it to start of the night.
And if you will left click, hold down the actual time and drag it to the left so where we can see a big picture.
All right, we have a 3 o'clock.
All right, so let's
From
zoom it out.
2:30 to 3:04.
That's fine. Let's zoom it out so we can see the full move of the night session.
Zoom it out.
Yeah, if you left click, hold the time down, like put your mouse right on the time as you're holding the left click and drag it to the right, it will zoom out.
But it's already zoomed out. It only has an option to zoom in. Oh, I know what you mean. Let me see regarding the yeah,
There you
okay.
go. There you go. Okay. Do we have our lines on here? I don't see our lines anymore.
Yeah.
Oh,
Let's see if I can bring them up. I don't know why.
the price, if you pinch the price down, so grab the price on the right hand side and then pinch it down.
Yeah, but let me see about the I don't know what happened to the indicator here. Just a sec.
It's there. We can't see the actual price. That's what I'm saying. The price isn't wide enough. So you have to pinch the price down so we can actually see it. It's
Yeah,
there.
Okay. Just a second. Yeah. All right.
There you go. Pinch it down some more. A little bit more. There you go. So you see it now? You see the yellow line there?
Yes.
All right. So during this session, we have a market high that has been identified. That market high is right here. Right?
Where do you see the market high? At what time?
I think I just drew it on the screen.
Oh, I see. Okay, yes.
So if you will put that, you know, there's a tool, if you go under your drawing tools, we can put one of those, I think it's a y-axis or x-axis. Yeah, all the way at the top. It's going to be the region highlight Y. Try that one. And you can stay in draw mode too. That way we can draw it twice.
Do you want X or Y?
We want Y. X will give you a vertical. Y will give you a horizontal. So if you will just highlight those tops for me, and then drag it down a little, not too far. Just kind of catch the tops. All bring it all the way to the top, maybe 15,
it is at the top. How far down?
No, that's what I'm saying. From the top that you put, only come down about 5 or 10 points from there.
Okay.
There you go. That's good. Okay. So let me get rid of what I drew now. Erase. Okay, I got rid of my stuff now. Okay, so if we can see now that the market, not us, we didn't define it. The market said that they do not like 15,335. If the closing price was 15,287, let's just round it and call it 15,285. How many points is that? 50. Okay, so if that's 50 points, if we were to take a Fibonacci tool, if you wouldn't mind grabbing the Fibonacci tool, draw it from the closing price up to this particular trading days and sessions extreme, which is the high.
You want retracements or extensions? Retracements.
Just regular retracements, yes, sir. So left click one time and then bring it all the way down, drag it all the way over to the right so we can have some space. All the way down to the closing price, because that's the part that we're referencing. Take it all the way to the right. That's good. All right. So now we have some areas that are of significance. Oh, did you drop it yet?
Just a second. I'm fiddling with my Zoom. Just a second.
All right.
Okay.
Okay. So now we can see where the 50% is. So when you guys see it goes to 50, that marker at 2:42 this morning of 15,337, the market already told us it's an open book test. The closing price from last night, it already told us it's an open book test. And what did we say market participants like to do at 50%? Well, because we have this knowledge base, should not be surprised that it went to 15,312 and it bounced up, because it did not just bounce up at random, at least not from the theory behind understanding Fibonacci retracements. It went to an area where people saw value.
Bill, just interject you here. At what time would this line be drawn? Because the question, whenever the real time happens, huh?
Yeah, whenever the real extreme is put in. And so last night, for this session, the high was put in at whatever time that high was put in. Maybe
about 2:30 a.m. So you need a dynamic real-time Fibonacci.
Correct. You have to have a reference point that is a deviation away from the close that is significant. So I would say 40, 50 points away. If it's not 40, 50 points away, it's not a big deal. This morning for really about 6 hours, we were range bound trading. That's a story for another day. But while we were in that channel, as I shared with you guys the other day, we're going to have that compression. And then by Thursday or Friday, we're going to get an aggressive move. On my journal, I said, okay, well, our average move, the average daily range for the NASDAQ is about 160 points. We're going to tie that in at the end today, because we're going to say, well, how did we know to be long and where it would go? Because it literally went about 160 points before it sold off, but we'll talk about that separate. All right, so now if we are going to fade the gap, based on what we see right now, the sweet spot looks to be about 15,325. Not because it's just 15,325, but if we layer a couple of ideas, Number one.
Billy, there was just one thing here that I did wrong. I need to reverse the direction of the Fibonacci. We still got 50%, but let me correct here my direction, okay?
Sure.
So this is this time it did not matter, but sometimes it will matter.
Yeah.
Okay.
The 50 will lay wherever. It's just a matter of the golden ratio and those things.
Yeah, the 50 will be fine either way you go, but the 6-1 is going to be skewed, and you're going to make the wrong decision based on which way you draw. Okay, so the 0% here is where it starts.
Yep.
All right, we got it now.
All right, so 15,325 still is our landmark Fibonacci wise. And so we have a 23% that is there. So we have a Fibonacci retracement level, number one. We have a psychological number, number two, at 15,003.25. Okay, so if we're looking at this chart and we take a short at resistance, which by what the market has showed us is anywhere near the 15,330s. So let's just assume that we take a 15,325 just to make it a round number. Our stop would be just beyond the high of the day. Beyond the high of the day is a 15-point risk. If it goes there, they're not ready to close the gap yet. They're not interested. So if we can draw a risk reward tool for an entry at 15,325 and just put this.
I have an observation here at 15,325. We actually have the 38 gap, 38%. The 50% would come later at 4:30 in the morning instead of 2:30. So because I had the Fibonacci reversed, it may have thrown you off.
Well, so the Fibonacci numbers that we have there, those numbers were set as soon as we made the high.
Okay.
So those percentages were still those percentages, no matter what the market did later, as long as it didn't go higher. Does that make sense, John?
Yeah, it makes sense. But when you were talking about the 50% gap, it would not happen at 25. It would happen at 12, 15 through 12.
Well, 50% is going to be a target for us. So we're not going to want to enter there at 50 because we're fading. We're looking too short. So when it touched the 50 and it went up, we understand that a 50% dip buyer is present.
Okay.
We're looking too short, so we're going to short it at an area of resistance. And in this case, the areas of resistance are the high of the day and then the 15,325 as market came off of a 50%. So it would look like
all right.
So line here.
So first we have a short.
Right. Because that's what fading the gap is. Fading the gap is going back to where we came from. We came from here. And the only way we can get back down to that number to get down is to short. That's the only way we can fade backwards.
All right. You know that the gap is down, but at this point, we don't know the gap yet because the market has not opened. So what we have is the closing price of the previous day. And are you saying, because we don't have the opening price yet, so how do we know the gap?
We do have a session high though. So remember when we talked about understanding order flow mindset, and the people in London, they don't know anything about all of that stuff. They get to the office just like we're talking about our market open. It's their market open at 3 o'clock. So those are significant money players in our market because London has a lot of money and they move a lot of money. So when a market participant is looking at this deviation from a closing price and they're like, look at the US market, we're 50 points above where they closed last night. That seems odd considering it sold off really, really hard. They're not really making highs through the night. I'm not interested in being long. Or if somebody closed, think about it. If you bought on the close and you wake up and you live in London and you are up 50 points, you are up 1,000 per contract. I think you guys can take 15 with those losing accounts, right? You wake up and you're up 15,000. What are you going to do as a market participant? You're going to consider taking profit. Will we agree?
Yes.
Okay, so if we get an order flow mindset of participants who will take profit, who bought on the close last night, and you get other market participants like those of us that are on trying to understand how to fade gaps. If I'm thinking somebody's going to take profit, that is a sell order. If I'm going to be a gap participant, that is a sell order. That's what order flow mentality looks like. And then if you couple that, of course, with you all's delta algo, you'll start seeing increase in the bids getting hit. That's because you have a lot of selling pressure. And so if you take the thesis for gap closure and you take a short at an area of known resistance, and of course, we're referencing on this particular trading day, 15,325, because it's a psychological. And what have we seen it do at 15,325 so far? Well, we've seen it push down to the 50%. So if we draw a risk reward calculator anywhere near 15,325, and then we place that stop above the high of the day.
Yeah.
If we do that, we have a 15-point risk.
Let me interject you again. Since you are selling first, then my first drawing is correct. I am sorry, I'm throwing off probably everybody watching this video. The 50% buy came out perfectly. So that made me, when I looked at it visually, I thought you meant to buy at the 4:30 a.m. So that's what I was looking at. But after listening to you, then I picked up on what you're doing. So
Yeah.
I'm sorry. This worked both ways, and so the first one was that I saw threw me off. But so it's good that it worked both ways. Okay.
Yeah. So with Fibonacci levels, I know some people get particular about how it gets drawn, but whether it was the 23% or the 78%, they're literally 1% off. The difference is negligible. So it honestly, because we're not dead set on a single number, we're just trying to identify an area. So whether we draw it from top to bottom or bottom to top, we're all still going to be able to see that there is a Fibonacci level, regardless if it's 78 or 23, near 15.325. And then golden ratio would be 61.8 or 38.2, which is precise. That one would be the same no matter how we flip it. So the only one that really changes off of an on-box Fibonacci from NinjaTrader will be the 23 and the 78 because they're slightly off. I actually changed mine, but that's another story. That's not a big deal. Okay. So, all right. So remember, if we're fading gaps though, John, we're not looking to buy on a gap that's up. If it's up, what's the opposite of up?
Yeah. Okay.
Down.
Yeah. Fading the gap is the thing. There is only one concern. If you fade every gap blindly, just because it is 50%, you're going to lose money. So I need the numbers you gave us that they close at certain percentage, but that's over 10 days. We are day traders. We're not going to wait 10 days. So what I'm most interested in learning is what we can do when it comes to that price, whether to touch it or leave it alone. That is my. So what else besides just looking at the numbers that you bring in your arsenal of possibilities? When not to fade a gap? That's my question. And when to fade?
Okay, it broke up a little bit. You said when is the appropriate time to fade? Is that right?
When to fade and when not to fade when it gets to 50%. Because I know that day traders fading the gap at 50% automatically will not make money.
No, so we're not fading at 50%. 50% is a target. We're fading beyond 50%, trying to get it to go down to 50%, because we know that market participants at 50% may be dip buying.
Okay.
So we're not fading at 50%. That's our goal.
All right. So it has to go beyond 50% close.
It needs to be higher.
Yeah, on a selling example here, it has to go higher. All right. So let me highlight here with my vertical line. Just a second. So at about 2:40 in the morning, it makes a high. Price comes down to 315, and then it goes back up. And Now, this is not the time of the gap yet because we're not at 9:30. So I don't understand what you're talking about the gap at this point.
Okay, so let's go back to, we're not at 9:30. What time does London session start?
Is it 3 hours from New York? It's 3 o'clock. Okay, so you are looking at, oh, I got you. I'm sorry. So anybody listening to this recording, we are talking about London gap, not New York gap.
Right, and we're gonna do the London gap, and we're gonna come back and do the same idea for us at US gap time as well.
Yeah, I got you. It took me half an hour to go to London. Okay.
It's all good. It's all good. The good thing about today is when we talk about patterns repeating themselves, oddly enough, it did the same
Yes.
thing at 9 o'clock, because just like they open their businesses up at 8 o'clock over in London, we open our businesses up here in the United States at 9:30. So we got the same pattern recognition. So that's why we're doing it at 3. So when we go to 9, everybody be like, oh, it did it again. And that's what gaps are. They just do it again. Okay, so the key point where I put the highlighter at, again, we're going to start our short at 15,325. And if the 50% is 15,310, I'm just using a round number, that's 15 points. This would be our first target here.
We don't see your, okay, you are down. Oh, great.
So if we,
Yes.
so I want you to do a risk reward calculator with the drawing tool, if you can grab that.
Sorry about that. The risk calculator, is that on the
Under drawing tools,
tools? Okay.
and then it's going to be towards the top, I believe.
Risk reward.
Yeah. So we're going to put an entry. We're going to left click at 15,325, because this is going to be the area where we take our entry.
Gosh, it would have been better to wait a little bit. So the question now is, how do we wait and take maximum advantage? I like to wait for a reversal bar.
Hold on. We're going to go back up to the top, though. We're going to put the stop at the top because we're shorting.
Okay. Just a moment. Where is my stop here? I'll move it there. My screen is very, my screen. Okay, let's see. Oops, I had it and then it went away. This is like fishing. You think you got it and then it's, okay, 336 here approximately. Okay, 10 points.
I want you to put the red line at the 36 because that's
The red line, yeah. And we are looking at 10 points or 15 points stop.
15, just above the high. So put it at 40.
Okay.
Okay.
And the
Now,
reward at
based on the way that you have your risk reward set up, it's probably 2 or 3 to 1. And in this case, regardless of where we enter, when we do math, we are all aware of where 50% is. So no matter what we get on our entry, we are in danger when it gets to 50%, because we understand that market participants may want to buy here, and this is a good spot for us to close out our short. So if we're in at 26, target 10. If we're in at 20, the target is 10. If we get in at 15, the target is still 10 because that is the 50% area. And if it goes there, we know that that is a 50% gap closure. So we can expect a response at 50%, and we definitely should expect a response at 100%. Like, please write that down, guys. Expect a response at 50%, expect a response at 100%. When I asked the question yesterday, why was I getting out at 60? 100% gap closure. Why did I get out at the same 60 today? Because I knew what it did yesterday at the same price. It's the gap close from the other day. So for people who are swing trading, they close that gap twice now. All right. Okay. So
all right.
those levels are significant. Let me get rid of those drawings now.
I have just
Oops.
one more clarification here. When you put your target, if I did my target exactly at the 50%, here's what makes you cry. And the price touches it just a tick above and moves away, because this is such a sensitive area that it's going to turn around, and it will turn on a dime. So look at how you can make money or lose money if you don't close it, and it comes, just let's see here. So it came to 11.50. So you are 2 ticks from the exact number 50%. So Billy, what do you do if you had a place an order exactly? How do you manage this? Do you do 5 ticks above the 50%, the exact 50% number, or do you wait and see what happens?
I'll be 3 point. I'll put an auto trail in 3 points before. So my order would have been a 6 and 52. I'd have been something like that. Because I know I want 60. I'd have been like 6 and 52. If it touches 48 or 52, I want to start trailing it as I approach that 50 area. That's a very good point, John, because again, you don't want to be so dead on a single number. We want to talk about a general area. You get close to that 50% and you're in profit, one thing I would say is if you wanted to stay dead on it, you'd have got it much later, but you'd have built a lot of mental capital to watch it get close and go all the way back up, draw you down a little bit, only to finally get there. But then I think as a market participant, you can say, all right, well, I can start fading or closing or trailing my winners. This time of morning, if I get 10, 12 points, I'm so. Although, and for this case, this was a 15 point, I'm going to start trailing at about 12 points. So at about 48 or 50 to start the auto trail, and out of trail at maybe 6 or 8.
All right.
Okay.
Yes.
And then at the market open, I'm a little more. I give them like 12 ticks because you have to do that. I don't want to, but if you want to get the big one, that's what you're going to do.
So I have another question I have another question for you before you go on. I know this is totally off topic. But at the heat of the battle, traders don't know because it's happening so fast, their minds cannot process. And that's where trading rooms with a moderator, someone leading the trade, and say, hey guys, this is our taking profit area, get your slings ready to really fire your target here, trailing, whatever. So have you considered setting up a trading room that you lead the trade in real time?
No, that takes too much mental capital energy. I mean, I'm very, very busy when I'm trading.
Yeah, okay.
I'm very, very busy when I'm trading.
Yeah,
and
that's what I hear of 99% of my successful traders who trade manually.
Yeah, I'm having 3 conversations with myself. I have my headphones on and I'm saying, should you take the trade? Should you not take the trade? Why didn't you take the trade? And that's a constant dialogue with myself. So if I stop to answer somebody else, I mean, I stop talking to me. And that's difficult for a person who's trading. And I'm moving around a good bit. So I don't, to me, if you understand the concept, which is why I want to get on with you guys. And that also goes to like the settings don't matter if you don't understand the concept, because it's just going to confuse you. So I want to take the time to understand if you understand the logic, you can create any setting. But if you don't understand the logic, you'll put a setting on, and as soon as you get a response that you don't like, you're gonna be confused because you never knew the underlying part of it anyway. I don't care anything about gap closures that fail because I know exactly that's the other gap. But I don't do them because they don't statistically perform the same as the phase. You got gap and goes and you got phase. Those are the only things you can do. Gap and goes are like buying tops. Those are not as statistically successful as fading, because of the nature of nature. People want to get back to normal before they get to ripping. Which happened today. So we closed at 100% today before it broke out. But that's just, we'll look at that when we get to 9 and 9:30. Okay.
Yeah. Shall I move forward?
Yeah, let's go to 9 and 9:30 now. We'll just do a 9:30. We won't do 9. I do 9 because that's my own personal preference. Unless it's a news release, I do it at 8:30. I'm considering it because again, it's a price action play. But let's just talk about 9:30 today. And this one, Again, 9:30, it's gonna be a little more space because of the price that becomes available at that time. So if we could bring it to where we can see, let's put us at 9, let's see. Let's put us at 9:30. So let's put the bar as if it was currently 9:30 because all of the reference points that we discussed are still valid because we don't have a new high.
Let me just grab it
Remember
here.
we talked about entering at 15,325?
Yes.
Hello, somebody. There you go. But that, listen, it's 9:30. We've known that now for 6 hours. So that's why, to me, a chat room, if you got 6 hours to prepare for this gap because you saw it happen in the morning. You just say, all right, well, if the folks in Wall Street feel the same kind of way, maybe it does a repeatable pattern and they do the same type of thing. The only difference is we have more volume, so you can get a little bit bigger move. So in this case, it went 50, 75, and 100% gap closure.
I'm trying to zoom in on my chart here. Okay, just a second.
Yes, sir.
All right. So, yeah. When I grab the price, it should move. Okay, now it's working. Okay, I think we have it now full screen. Just a second.
Okay, good deal.
All right, carry on.
Okay, so we are approaching 9:30. Bring it. Can we bring it to where, I guess, can we make the current bar 929?
Just a second. Current bar 929.
Yeah, just hit the little left arrow bottom left, and just it'll go back bar by bar. That way you don't have to zoom in and out.
All right, 929. Are we there yet?
There you go. That's good. Now listen, I know that looks dramatic. Remember, I told you I fade gaps at what time? 9 o'clock, right? Do y'all see what happened at 9 o'clock?
Let's see. Yeah, price broke down after a high. Yeah, it touched the high.
So this is now the second time at 9 o'clock. We had a gap fade. What did it do? It came down to the golden ratio. All right. So that's now the second opportunity. So I got a question. If the market told you that they don't like 15,325, and they told you that they would pay you 20 points every time you come and take a trade right there, the next time it goes there, what would you be prepared for? I would hope you'd be prepared for a short. You put your order at 15,325 and just ask them to be who they say they are. They don't have to do anything special. Just be 50% of the man you said you were going to be. So we put that order in after the market opened at 9:30. You get the exact same response. So you can move it one candle at a time to the right. When I get finished, another watch. Yeah. About 15, 20 more minutes.
Now, my Fibonacci is on a selling mode at the moment. Is that still the way you want it?
Yeah, that's fine. That part that we just want the landmarks.
Okay.
Here, let me see if I can jump here. Hold on just a second, John, because I'm going to go to my laptop now. 534995. Oops.
Recording in progress.
John, can you hear me?
Yes.
Okay, good. I'm on the laptop now. So I'm gonna send a request to control your screen now, and then I'll run it from here. Okay, so I'm gonna zoom it in. All right, so we already have our landmark about where we want to be as far as our entry price at 15.3 1/4. So you had 933 that you could have entered. I think one of the things you want to see is a bar that is favorable for fading the gap, because we don't know where the top's going to be. We're just waiting for the first sign. So when I say the first sign of closing the gap after 930, that's a bar that closes lower price action wise than what it was going up. This is a 1 minute candle, correct?
Yes.
Okay, so this is a
No,
long
30
time.
seconds. No, I'm sorry. 30 seconds. That's what you
Okay,
asked
all right.
originally.
Yeah, 30 seconds is good. This is my first 30. This is the first sign that the folks in Wall Street said that they don't like a price. Okay, well, maybe they're looking at the same data points we just analyzed for 6 hours. So we just gonna ask, hey, do what you said you were gonna do all night. If we get an opportunity for this trade to work out in our favor, guess what? It does I mean, this one, today honestly is probably a little more favorable than most days, but it did like exactly 100%. One of the things I told you guys, expect a response at 50%, which if you look at it right here, this is 50%. What was the response? Look how it bounced all the way back. So for the 50% dip buyers, they can take advantage of their quick play from 10 to 25 for 15 points. And then the bears came in. Again, a downtrend is defined by lower highs, lower lows. There's a high, there's a lower high, there's a sign of short, and then they ran it all the way down to 100. After watching this video, please, guys, don't ever sit and be short down here at the closing price after we just spent this good hour of Mr. John's quality time going over a gap closure. And we know that 50% is significant and 100 is significant. You should want to buy here at 15,287, because if you were short at 25 and you got 40 points, aren't you going to cover your short and get out of the trade, which is a buy order? Isn't someone who has an opportunity to buy it at yesterday's close, considering it was up 50 points, now has an opportunity? Oh, I can just get it at the same price I could have got it for yesterday. I'm glad I didn't buy it at 15,335.
Billy, I have a question on the chat about 30 seconds being too fast for NQ. I'll give my answer and then you can augment on that.
Okay.
If you know your numbers, 30 seconds is the time frame you have to make a decision and act and quickly. Basically, you know where you're going to get in, and it takes only 5 seconds for you to push your button. If you don't know where you're going to get in, then 30 seconds or 30 minutes won't matter.
I 100% agree.
Okay.
We've been talking about 15,325 all morning. We've talked about it for nearly an hour, guys. We know where 15,325 is.
Yeah.
Put your sell in as soon as you see my price action. It's price action play, so it is fast. We can't make price action slow because we can't govern the speed of which the market moves. If the market wants to move fast, they're going to move fast, absolutely. And so if it's too fast for you, Mina and I were talking about mental capital, and what I would say is watch from 9:30 to 9:45. Don't tax your mental capital looking at the market open, because it will stunt your decisions for the rest of the day. If it's too fast, don't participate, because they're not going to slow down at 9:30. Not for us. We don't got that kind of money. We got like 5 contracts and we don't matter. So now I would watch it and appreciate it and learn as much as you can during that time without real money being on the line, and then let it settle up at about 9:45. Guess what happened today at 9:45? They all decided that they all still like the previous day's close, which was close to the previous day's low, which is an area of support. At support, we want to consider being long. All right, now we had a 3 o'clock version, and I'm just saying 3 o'clock because that's London session. We had a 9 o'clock version. I'm saying 9 o'clock because that's the same type of entry into the market that the London people did at 8 o'clock their time. And then we have the official cash open at 9:30. Those are 3 gaps that gave you $300 for one contract. That's $1,000 for the day. Now, the cash session is in. When we talk about highs and lows, the cash session is its only thing. Drawing fib, should we use a 30? Okay, good question. The high of the day, it doesn't matter if it's 30 seconds or 10 minutes. The high of the day is a single price point. And at this time, it was 15,335. So it doesn't matter what time. You can have a line. The high of the day is the high of the day. Just like the closing price won't change. Closing price is going to be the close for all of today. It will always be 15,287. It will never change. And the high is the high until it is no longer the high. So in that case, it doesn't matter what chart you use. I'm saying when it's time to execute, you do want to be on something fast. But for you to find your landmarks, you can use a bigger time frame if it looks like it's a little cleaner for you. Does that make sense? Or who asked that question?
Also, Billy, you can put a little chart on the side with the 5 minutes or 15, 30 minutes, does not matter, so that you can have a bird's eye view of the high and the low of the previous day. But
Yeah.
it's just for viewing, and then you take action on a low time frame, as you said, 30 seconds or 1 minute.
One of the things I use with my drawings, guys, is my drawings, when I set my defaults, I make it so that it can, when I draw it the first time, it will sit on all charts. So if I had, like Mr. John is saying, a bigger time frame chart, once I drew it on this small time frame, I could see it on my big time frame. We'll put a big time frame on towards the end just so you all can see, because these drawings won't move. All right, so let's move it forward.
Great idea. To put a longer time frame just to see, confirm everything we did on 30 seconds.
Yep, it's going to be the same landmark. So now look, resistance is resistance until it is not resistance. Here's a clean bar above. So guess what this is now? Support. So we're going to draw another landmark because the cash session said, hey, listen, this is our low right here. And I'm going to do, that's the closing price. You know what they say about wicks? Do you all understand what wicks mean? That means weakness. So if you see a wick into the close, that's weakness number one. This one at 9:56 is weakness number two. This weakness at 10 o'clock, all the computers turn on. They were like, hey, they won't get lower than the close. We can buy. I don't know that to be official. I'm just saying, guys, it moved within 1 minute. It moved 50 points. Come on. We got to have an idea that the folks is buying the 12,590 and running it to 12,530. Why did it snap down right here? Because it's the same resistance that we've been talking about now for 7 hours. So when that resistance popped in, they came back, they did a golden ratio retracement, and then they broke out. This is what the breakout players have been looking for all morning. Clean candle above, and now the market now turns bullish official. Now let's do the exact same thing we did earlier, right? We have a landmark low. We have a market or a session, cash session. We have a new high. So now we have reference points, right? Now that we have reference points, we would be drawing a new Fibonacci. So we will take it. Again, for me, John, I don't personally care if it's the top or bottom, but I'm going to draw it. Here's our session low, which is the low no matter what time frame it is. There's our session high, which is the high no matter what time frame it is. Now, in my video or in my snapshot I sent you guys, I got out at 60 something, but don't y'all see that that was the high of the previous day? And so if you think about it, the high of the previous day, if it was 68, I'm out at 61. And that goes to what John was asking me. On approach, I'm going to tighten up. It doesn't have to be exactly the number for me, because if I'm winning, I mean, those last couple of points don't matter to me. All right, so we have a low, we have a high. Once we made this extreme at 15,430, remember when I prepped, my mind had already been saying that 15,444 might be a resistance level. So when it comes to 15, guess what, guys? 15,425. Doesn't that sound like the 15,325 that we talked about earlier? And from the quarter, what type of response did we get? We went from 15,325 to 15,285, which is what? A 40-point move. Guess what we got here? A 40-point move. Different price points, same behavior pattern. So first sign of weakness was here. There's some fade right there. Boom. And so now if you were to have shorted it up here, understand that this general area, because it just did it here, it look, if we took a picture and I sent it out, this looks exactly like it, the 930 downward move looks exactly like the 1022 downward. Green, 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 red, 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 green, lower high, flush, right? Green, 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 red, green, lower high, flush, a repeatable pattern. So now, if you guys have been listening, John, I know you had an answer. I don't want you to give it to me though.
Yeah.
I got a question for everybody that's listening to the video. If you wanted to buy at value, what price would it be based on everything that we see on the chart right now? And this is 10:28 in the morning. We don't have to wait until it gets to that area. I'm saying at 10:28, based on what we've drawn and based on the thing I told you to write down, where would you want to enter a long? Not you, John, because I think you see it.
Okay.
Who's all in here?
50%.
50%.
Oh my, hey, Mina.
Okay.
Did y'all tell me 50%? We're not even down there yet. That's all the way down into the 50s and the 60s. What if the market never makes it there? So what? Chill out, wait. Let's see what happens. I think it goes. I'm hoping it does.
Let's see. Let's see.
Oh, look at this here. Oh my goodness. Okay. Now I got another question. This morning, how did it respond off of 50%? Didn't it bounce up? So guess what? This is not dead on the 50%, but again, guys, put it all together. It doesn't have to be exactly 50%. It's the general area. So not only do we have a 50%, we have the previous day's closing price. We have the previous day's high price, which once it broke above it here, it's no longer resistance. It is support. We've known it is support since 10:10 in the morning. So at 10:40, 30 minutes later, we should not be surprised. We should be looking for an opportunity for a setup to bring or to come to us that fits our trading profile. I don't care what indicator or what setup you have. They gave you 10 minutes to get yourself into a long. And I'm sure everybody has something that eventually told them to take a long. You could draw a trend line and say it's a bull flag. We're going to throw that on there. You could be the 50% dip buyer. Where's your trends? Is here. Trend channel. We're just taking a high. I don't even have fractals, but if I have fractals, I promise you where I'm drawing this line is, the fractals are there. Okay, so boom. Oh, you don't have an extension on yours. It's cool, no big deal. I'll just put it there myself. Boom. Okay, so that line, first clean candle outside of it is right here, 15,375, 3/4. So it should not be a surprise they run it to a quarter to the solid dollar before it has some congestion. So that's a great opportunity here. And now gaps are done, okay? But did you all see how using the Fibonacci tool, we've only talked about 1, 2, 3, 4, 5 different trades. 99% of the time we're doing nothing. So what we can do during that time is get our thesis together and patiently wait for it to set up and take advantage of an opportunity in the market that when a statistical probability that is favorable for you starts to show you signs of being able to go into action, then you can take advantage of that trade.
Billy, going back to the top at the very high, 4.25, you
Yes,
said, you mentioned, well, if you shorted at the stop here, is there any thesis you can build toward the idea of fading that super move up, up?
John, I thought you'd never ask. This is the part where I wanted to tie it in.
I had the same question too, because it's all-time high, and how do we know that they're not going to push the price further?
That's my vacation money there, vacation money there.
So
yeah,
listen.
but I shorted when it retraced back. at, I think around 10:56.
I'm on
Yeah.
we have a low for the session, right? Can someone tell me what the low is for the whole session?
Yeah, 15,285 approximately.
Is this it right here?
The yellow one.
That's the previous
Oh.
day's low.
Oh, previous day,
Yep.
the blue.
Yeah, that's prior day low. Does anybody have today's session low? I can get it. I can grab my chart.
Okay.
Keep your chart there though. Let me go to my screen real quick. Okay, the session low is 15,265. Somebody write that down. It's gonna blow y'all mind. Like I hope, like we are recording this one, right?
Yes, I think.
Today's session
Yeah.
low is 15,265. I sent you all my prep journal. Does anybody recall what was to the right of the word NQ? The daily range. Remember we talked about daily range? The last 21 days, which is a business month, the average range, I didn't make the average. The market said they only want to move 160 points a day. Somebody do me a favor and add 160 points to the session low and tell me what that price is.
When you say the session is that this is the overnight or including
Yep,
since,
this whole trading day from 6 p.m.
okay. By the way, I'm selling this video here for $1,000, okay?
All right, make sure you buy me lunch. That's all I need. Come on, Mina, give it to me. What you got? Today's session low is 15,265. We already said that we just want the market to
think
be
it's-
who they say they are.
Yeah,
What you got?
15,263.25.
Okay, so if you add 160 points to that, what do you have?
153. What? 150 you said?
160.
$425 to that tick.
No, 15,423.25.
15,004 and a quarter. So now y'all don't have to ask, why was I short there? We been knew that was going to be a landmark spot. You get it? That play didn't start at that time. That play started last night at 6 p.m. When it set a low, it never went lower. The market tells us the last 20 days, it only moves on average 160 points. Don't ask them to be outside of average, even though Monday was beyond it. It was 250. That's not average. Just ask them to be average. It went exactly 160 points. If it goes to the close and it responded favorably, what do you think it's going to do at its average? It's going to I don't know this to be true, guys. I'm just going by what data tells me. Expect a response there. So when it got to 15.4 and a quarter, that's called exhaustion. Usain Bolt is the fastest man in the world. If you make him sprint, guess what he has to do? He has to take a break at some point. He's the fastest, all right? So the market sprinted up there. Guess what the market had to do? Had to take a break. Now we're at 15,433, so we're making new highs. But what did it have to do before it made new highs? It had to take a break. Yesterday, 15,368. Yesterday's low, 15,255. It only moved 120 points. But when it went down to 15,255, getting close to the extreme of its average, how did it respond from 255? It bounced up 70 points. So the only difference is the direction. They told you yesterday when it goes close to an extreme, I give a very strong move back the other direction. Today we went extremely up. Extreme move or response to the downside. Yesterday we went extremely down. Extreme move and bounce to the upside. The market does it every single day, guys. I hope.
Hey, Billy, interjecting you here. On your notes, you have 15,444.
Yes, that's a range.
Range, okay. And so how did you make the 4 and a quarter instead of 444?
So 444 is a computation from math and point of control.
Yes, yeah,
So it
okay,
just
I got it. Now the 160 points, I didn't, you mentioned it and I missed it. Where did you get the 160 points as an average of the business days? You talked about the average of business days range.
Yes, sir. The average daily range for the last 20 days.
All
So
right,
if you
average
took-
daily range for next.
Yep. If you took the low and high for the last 20 days for every day in the NASDAQ market, adding them up and then divided by 20, you come up with 160.
You said business days, and I thought that maybe Friday was different for each day, but it's not. Every day, it's the average of the all days.
Of all the 20 previous days, correct.
Okay. All right, thank you.
That's called the daily range. So if they're telling you that we move on average 160, if it's at 180, I'm done trading because you're doing something outside of average. I'll see you tomorrow. Because you're now doing something that I can't recognize. I can recognize your average because you're just gonna do what you do every day. So for me, I've been trading NASDAQ for a while. You guys can book anywhere between 160, 200 points for NASDAQ. Even though March was like 400 points, it just was accelerated moves. But on average for years, it's been about 160 to 200 points per day.
Okay.
Look, we don't have any indicators on our chart. We don't have nothing. We just have a concept, guys. The concept plays out every single day. I have one specific account I gap close every day with. And I mean, I have some days where it loses. So if it loses on a gap play, I just recover it in regular trades. But if it hits its goal, then I'm done trading now. When it's specifically for the gap, it is very good. If you told me I can only trade an hour a day, I said, give me about 30 minutes to prepare so I can look at these landmarks, let me trade the gap, and then make me stop trading it. That's if you had to force me to do something. That would top every other thing. And I got some stuff that works very well. But if you force me to manually do something, let me do the gap. Okay.
All right.
And if I can do the gap, you know, it's not always the same time that it's time to close it, though. You have to wait for price to move in the direction that you're trying to be. So today's gap representation was a short. I'm just going to briefly throw it on the screen for yesterday. Yesterday was a long, so y'all understand what my yesterday long was about. Y'all already had a sauce now. You can review the video. Mr. John will put that out for you guys. Great community of supporting people. And then we'll go to that big time frame situation too. So here's yesterday morning, right? Oops, my bad, a little lag. Okay, closing price is 15,362. Okay, here's the market open at 9:30. All right, so if the closing price is up, how do we get up? We got to buy. Here, get you some of this, get you some of any of this long down here. Woo. Remember my exit yesterday was at 61. It was touching in this area. That's it. It wasn't nothing special. Where was an opportunity to dip by? 50%, because this what market. Mina told me she gonna buy 2 purses. She not asking her husband any questions. She just gonna buy them. She'll tell him later. All right, there's your 50%. All these folks did was consolidate 50%. That was sweet. They gave us 10 minutes to buy some 50%. That's a good sale.
Yeah,
Right.
Billy,
So when I
well,
said-
how about your stop here? Are you always doing 1-to-1 or you do 1.5?
So the stop is the extreme. So okay, good question, John. Listen, gaps sometimes cost because if you're far away from the extreme, we gotta do whatever it say do. So if it says go to the extreme and it's a 30-point risk, it's a 30-point risk. If that's beyond your risk tolerance, this is the day that you don't participate in gaps, or you get selective about where you want to put your entry. So if you're somebody like, I'm only risking 300 for gap trades, you need to be 15 points limit entry from the extreme. And if you can't get filled, that's fine, because you didn't want to pay enough to watch that movie. So for me, it's whatever the extreme calls for, and that's just a matter of sizing. So if the extreme is beyond what I can take with 5 contracts, I have to reduce down to 2, just so I can still have my cash risk under control. If you all look at, I think I sent a journal for gaps, I allocate 500 to 1,000 for the gap. But if you're paying 500 to 1,000 a week, I promise it'll take care of the days you don't win. So if I lose 500 on the gap play, I promise the market gonna tell me how to get that 500 back. I'll get it back, and that account will be back balanced or green. If it hits the goal, I'm plus 500. And then I'm done with that account and move on to the other ones. I do that because remember we talked about mental capital. I dedicate gap thinking so that I don't think about anything else. So that keeps me busy so that I don't get in choppy trend, because you can't look for a trend at 9:30. That's not who's here. 9:30 to 9:40, 9:30 to 9:45, people with a lot of money, and they're going to force a bunch of things to move around. You're not going to identify a trend during that time. There is no trend. It's price action. When they settle up and get their money and they cash on out, then a trend can prevail, which today was big picture. It's a bullish environment. Never failed the market. It went to the close, and once it gets to the close, expect a response. Here's a response yesterday. It went to the close and it dropped 20 points off of it. Okay, actually it dropped 30 points off of closing yesterday. So do y'all see how significant that is? Soon as it touched the close, we get a 30-point drop. Today we touch the close, we get, well, way beyond a 30-point bounce, but it's the same pattern. It's the same predictable pattern each day. All right, and then we talked about going to a bigger time frame. So our landmarks are already drawn. Oh wow, it's 1:30. I got to get out of here, guys. We're way past lunchtime. Okay, so this was a high. See, so we get the same response down, response down, response down. But during that time, you're getting higher lows, so you know it was going to compress. So I'm going to put this last region on, and then we'll go to a bigger time frame. If you guys have any last questions, please put it in the chat or jump on the mic. We can cover it, and then I'm getting out of here. All right, so then we're going to go from a 30-second chart. We'll just change the data series to we'll put it on a 15-minute chart.
Found.
Oh, there we go. Okay, 15-minute chart now. The support spot is still that support spot. This is yesterday at 11 o'clock. This is yesterday at 3 o'clock. So today, when it came there at 9:30, it just did what it said yesterday. All right, there's the big picture. This was the all-time high, I think, right here. And once we finally broke it, then it ran on off. But 15 minutes is still the same 3 o'clock resistance area, which when we look back, was support, broke support, became resistance, tried to jump over it, became resistance, came back to the area, became resistance. Next day, still resistance. And so that's why it's good to look at your chart on the big picture and drop some little landmarks. That way you don't have to think about it, like later. Because when you draw, if you have a tool that will go across all charts, I'm going to put the axis on all charts, so that way if you ever need to do it, Mr. John, it'll be there for you. We'll go all charts and then template save. So now whenever you draw it, no matter what time frame you're on, it will be there. If you have multiple charts, it'll be there. So if you did have one that was 15, once you drew it on your 15, it would show up on your 30-second chart or your 1-minute chart, 5-minute chart. Okay. Any last questions?
Hey, you covered this very well, and obviously we'll do more. But one question about the algo that we have been working on for so long throughout the week is the templates. So we set up a group for templates only. So everyone is hoping, expecting to get Billy's template.
All right. I'll put, I think they got the oil one, but I think it's the same one from last week. I'll give you the, here as well as I trade, as far as XMLs, I don't know how to move XMLs. So when y'all asked me that, you were like talking foreign to me. I'm like, I'll send you a screen.
No, the XML is the template. When you save, it becomes an XML file. It's the same. So the template save, and then you go to the templates folder, and you see a file under the strategy name. And,
I'm going there now.
It's the same thing as it simply is a .xml. But otherwise it's a template file. It's same idea.
Is it under program files x86?
It's under my documents, NinjaTrader,
8, yeah,
NinjaTrader, and then templates.
and
Okay,
strategy.
I'm going there now.
Oh yeah, templates and strategies, and then you get the name of the strategy. It saves under the specific name, but it assumes that you have saved in the first place when you go on your chart. So from your strategy settings on your chart, you save that whatever you're running on that chart, you save that as a template, and then you find it under the folder that we were talking about.
Okay, so I'm at. Do I go into bin, or where's my next one after NinjaTrader at custom
Templates.
templates? Okay, go back.
Not a bin. I think it's before the bin. It's the main folder under. You don't get to the bin before the bin.
I see it. Okay, and then I go to NS
Strategy. Yeah.
NS Delta strategy, and then it says default. I'm gonna send you guys the bullish one. You just have to change it to because that's the one, that's the VPS I'm in. It's the same. One is bullish, one is bearish, and one is both, but the settings are the same. There's no different setting on it. Okay.
Yes.
So I'm here. What do? I hit copy.
Copy and paste.
Okay. All right. Can somebody open a Discord and tell me, is it in Discord? Just verify so that way you guys are good. And please note, remember my strategy is built for my risk tolerance, right? And so in this video, I hope you guys appreciate more than anything the process to get to that point. The process is the same no matter what. So for me, the reason that the Delta Algo worked pretty easy for me, I already have my own idea about a thing, right? So if I have my own idea about a thing, I just put the same idea. It wasn't like the Delta. I don't think there's so much the Delta Algo. I think it's just more, I'm comfortable with certain parameters about how I want to approach. Okay, so it's not letting me do it that way. Hold on for a second.
How do you know that? How do you know that you saved those charts templates? Because unless you save them, they're not going to be there.
It's here. I'm looking at it. I mean, I'm looking at what you all are saying. I have it here.
All right.
I'm just from the VPS. I can't copy to my Discord over here. Let me see if I got Discord in the VPS. If Discord is in the VPS, it'll be easy. Discord, maybe. Looks like it. Log in. I'm human. Uh-oh, they're gonna get mad at me. All right, it's faster to send the email.
Code. Okay. Yeah, I got a bunch of things from you here on Discord that I have to catch up on.
It says default XML, so that should be it. Pulls and send it without a host. I don't need that. Let's open it up now on the regular laptop. Sent default XML. I'm going to download it. And we're just going to say delta.default. And then we're going to drop that in the Discord. All right, drum roll, please.
Yes.
Boom.
That looks.
Yeah,
There
we
you
got
go.
it.
Okay. All right, that's a good tip. I've ran it all week live, so I mean, I'm not probably gonna bother it next week.
So this one is for NQ, right?
Yes, for NQ.
Okay.
That one's NQ, and I sent you guys like the thing for oil the other day. Oil didn't. Let me see what oil is. Oil wasn't so great.
You didn't send the XML for the oil. You only had the screenshot of the settings.
Gotcha. Hold on. let me look
Yeah,
at that.
see, the thing about the XML template, Billy, is that it makes it perfect copy of what it is instead of people reading the screen and then they don't get the right thing on the.
Yeah,
on
they
the
don't
picture.
match.
Yeah, that's cool. Oil is down 393 today. So I'm using NQ. I'm still trying to, oil's done okay for the week, but it's not NQ yet. So I'm still being nosy about oil. I mean, it's
Oh,
green for the-
there is one more item. When you send a template, there is one big problem. We don't know the chart. So chart frame for each one is, are you using the same chart or using different charts for each template?
Ninja 12.2 for NASDAQ, Ninja 5.2 for oil. And it's a different template for oil altogether. It's different risk, it's different trails, because it's a different market.
Yeah,
Therefore-
because the template is about 75% of the information. The other 25% is the chart.
Series. Yeah. So data series was Ninja 12.2. I don't know. I don't think there's anything else on there.
I hope someone is taking notes of that and please post on for us.
I typed it in Discord. I typed it under where I put the
Okay.
template. So I put Ninja 12.2 and then the whatever I need, the XML is there as well. And as far as oil, you guys have an oil video from me too. So you can go through the oil and I walk you through step by step how I came to the conclusion of what oil is. So you would just have to put it in yours exactly the same way. All right, but everything starts first with what? Risk, guys. Got to know what your risk is. And everything else you can build from there. You don't know what your risk is, or if your risk is inappropriate. Like, I mean, yeah, it's y'all's money. You do what you want to do, but you just look it up online. Don't listen to me. Just Google how much of my account should I allocate per trade. You're not going to hear anybody tell you 30%. That's, I mean, would we risk 30,000 on 100,000 of our own money on one trade? Probably not. It's not a good idea. I don't think it is, and I've never seen any big fund manager say so. So if there is one out there that does say it, I'm going with the law of large numbers. The large numbers do not say it.
Yeah, hey, Billy, one last word from me is if you don't have it yet, we should work toward having a robot trading the daily ranges based on the plans that you laid out today.
I got one, but I haven't bothered it so much. This is what I learned, John. I shared with you guys, I have a bunch of algos, and it got to a point where it's just doing the same thing the other ones do. It's either gonna hit your daily goal or not. That's it. So, I mean, Delta Algo was fun because it was something to do, but guess what? It works. It's paid for itself 10 times over. I mean, I may still run it, but I'm just, it didn't do anything. What I've looked at is all of the entries, and I'm looking at my own stuff with what I have entered there too, whether I knew about the encapsulation or not, I still would have. Like on my karma bars, on my reversal bars, it's not doing something that I didn't already know. It's just presented a different kind of way. And so they always say all setups work, right? It's like a Reese's. It's only chocolate and peanut butter. The market is chocolate and peanut butter. It's bullish or bearish. That's all it is. So if you can take advantage of when you have a statistical probability for it to go up, you be long. A statistical probability to be short. When it's going down, you be short. And the end result is the thing that you came for in the first place, and that's the money. Delta Algo, I mean, I give it an A+, but MACD works, RSI works, pivot points work, everything works, right? You got to make sure that you keep your psychology under control, and most importantly, your risk. Because what will happen is if you take a setup and you lose too much, you think that it's an issue with the setup. It's not. If you take 100 trades and you have a statistical probability of winning 60, you don't get to pick when you lose the 40. You don't have that control. You got to just lose the 40. And when you lose the 40, you got to be mentally capable to stay with it to get those 60 so that your net is where you want to be in the first place.
Yeah, I think, yes, it does. I just have one observation about this. You know, the mental strength that you have acquired trading allows you to move between automated and non-automated automatically. The dream of each person who is in our group and the trading population in general is to be able to run something automatic, to have some income, and then learn the art of trading, which is the ultimate destination and desire for someone to control However, people who go into trading education first, 99% fail because all the trading education is based on selling you an idea and not an execution. And so that execution, hopefully we can get together here and make it a difference, because we are not biased toward one way or the other. We are focused on presenting a plan that works for people to be able to make an income of whatever someone's level of desire is, and then concurrently control the emotions of, because what you set out today is very, very easy on the chart, but not on the emotions.
Exactly.
So that's the destination we're going. And I think this is going to be a different journey. We got you repeating to us what we would get on any trading education, but there is a difference here. When you are not charging for it, as is the case here, we take this on a much more level of control of our emotions, because nobody's running the meter here, and that alone gives us such a peace of mind. I believe that when you are paying whatever amount of money to someone, you doubt that person's motives. Doubting that person's motive is the killer, because you already have preconceived notions of this person's motive. Is he really teaching this that it works, or is he teaching this because he is just a teacher? And we know that if you don't know how to trade, then you teach. You teach for money, of course. And then the people who are able and willing to teach not for money and they can trade is such a rare commodity. So you are the most rare commodity that we have found in the last 3 years.
No problem, man. Hey, listen, it was something I wanted to do to make sure I gave back. You guys let me in, not too long ago. And again, I know that I could actually do some mentoring, but I'm not what you all see online. I don't advertise. You come to me because you know me, or you know somebody who does. That's it. And so what you all got today was a lesson on gaps, the same one I do with people when I mentor them. And the key now is, because gaps only happen once a day, if somebody wants to take a commitment, take an account, and then you do this thing every day for 100 days, because at the end of the day, that's the part that's going to resonate most. We can learn from all kinds of people. The results are going to speak for themselves. And if you can do it every day, once a day, take the trade, and don't be any kind of way about the result, because until you get to 100, you really won't know. Me telling you won't get it. I mean, you doing it, or a person doing it, is the ultimate teacher. And I think that anybody does it 100 days, even if you did 2 of them for 50 days, you have a data point to say whether or not gaps are suitable. And I can tell you, they are. I dedicate that time specifically to gaps, because there's other things to do at the open, but gap works.
All right.
So Bill, is this only on NASDAQ you do every day?
No, sir. You might have came in late. Gaps work on no matter what you look at. I actually learned gaps with stocks. That's really where I got it. So I just brought what I learned from stocks to futures. And then that's the time when I started to learn, oh, you know what? None of this stuff matters, because it's the same people here, buyers and sellers. It's buyers and sellers and options, NADEX, Forex, futures, stock. It's still just buyers and sellers. And buyers and sellers are going to do 2 things: be greedy or be fearful. All right. You want to take advantage when they're fearful, be short. Buy when they're greedy, because they're going to run it up. All right. So today we saw, I won't call this a greedy day. This just was a value day. They bought it at a support level. So this was a good day to just take that long at the beginning. But you can apply gaps to anything. You guys can give me a stock and tell me that a gap more than 10%. I'll show you how to close a gap. Amazon, Expedia, PayPal, MasterCard, TVIX, whenever it was around. I used to trade TVIX. Let me tell you, when I started trading, my first thing I made a bunch of money on was TVIX. And let me tell you how not intelligent I was then. I thought TVIX was a company. That's how much I did not know. So I want to encourage you guys to please take time to learn. You take time to learn, you go into any country. When you learn how to speak the language, guess what happens with the language? It never changes. If I go into a restaurant today and I say I want a hamburger anywhere in the United States, everybody knows what I'm talking about. It will never be different. The market is a language too. It's an art. Understand how to read the language. It will never tell you something different. Now, it may be like a lady, which can be, you know, their special variations of them, their behaviors, but hey, it's a known commodity. All right, guys,
All right.
have a blessed weekend.
Thank
Thanks,
you.
Will. Thanks, John.
You're welcome.
Yeah.
See you.
So you're
Bye-bye.
gonna send,
guys.
one of you
Thank
gonna
you.
send the recording?
Yes, definitely.
Okay, thank you.
Bye.
Thank you. Bye.